Good morning, traders. My name is Pete, and this is Trading Kitchen. Welcome to this new educational video content in which, by which I try to help you becoming a profitable trader. In my videos, you often hear me talk about triggers, and today in this video, I will tell you which are my best triggers and which are all the factors that I use to trigger and to enter the market. But let me first invite you to join my Discord group, in which I will share every day my trading ideas, my trading journal in a total transparent way. Subscribe to the channel, the YouTube channel, press the thumbs up button, let me know what you think about this video. Follow me on Instagram, which I will share some quick tips to help you, that can help you on your trading, and obviously Trading View, which I will share my multi-time frame ideas every Monday with a Monday overview for a long-term and a swing trading. Okay. Above all, I want you to join my Discord group, in which you have my ideas, my trading ideas for intraday swing trading, educational content, group mentorship, and also my my trading journal. Okay, by which you can follow all my backtests. You can see all my backtests, my trading ideas, and all my trades. Let me update now. One trade on that I just closed on break even on DAX. Okay, so here you have all my trades, so you can see all the backtests, all the reason by which I get to the market. Okay. So there's everything for free. I don't want your money, I don't care your money. I just want to grow my community. Okay, so I hope you like this kind of thing. Okay, so let's jump into the chart and what we can see, what we can tell about triggers. First of all, what is a trigger? Basically, a trigger is a confluence of one or more specific factors, okay, that every trader builds to enter the market. So every trader has his own trigger. In this video, I will tell you what my triggers are, backtested on the market and year after year. Okay, so it's not something that I build in just 1 month, but is perfection year after year. Okay, well, it's not perfect, to be honest. As you can see on from my trading journal, more or less one trade every 2 trades hit the stop loss, but it's part of the game, and it's no problem. Okay, so just remember one thing: the trigger is not a strategy. Okay, this is very important. It's just as a small part of the strategy. So please do not start using these triggers without backtesting and implementing all these things in your strategy. If you don't have a backtested strategy yet, you can go and take a look to my videos on my intraday strategy, the BS strategy and 81 strategy. Okay. So that's everything I want to tell you about as premise. So what we are going to see right by now, these are all my triggers, okay, and you can choose, like I do, to use together in confluence, one to each other to enter the market, or you can use a single indicator, a single trigger alone. Okay, obviously, the more trigger, the more confluences you have, the less trader you're going to take, but it will be so much more precise. Okay, I use the first trigger that I use is the detail pattern. Okay, if you watch my previous video, you already know what I'm talking about. Okay, about basically this for me is the best trigger, is the only one trigger, is the only one candlestick pattern that I use sometimes also alone, so I don't need another confirmation. Okay, if I see a good candlestick pattern, a good detail pattern in a good zone, I will open the trade immediately. Okay, what is the detail pattern? Let me give you a quick example, but go and check my video because I explained very good what the detail pattern is. Basically, it's a candlestick pattern that I discovered from a Linda Rushke video, so it's not my invention. Okay, it's something that I took and I backtested. Okay, so basically an detail pattern is this one. Okay, when you see, so is created by two candles. Okay, the very important condition that you have to see is that the second candle tail, so the last tail, must eat completely the body of the previous candle. Okay, so if this is a body with this tail, sorry for my drawings, guys. Okay, let me draw better. So if you have yeah, this one. Okay, so this is the body of the first candle, and this is the tail of the first candle. Okay, when you do have the second candle that is like this, so basically a pin bar, is like an engulfing, but is probably the most powerful engulfing pattern that you can see. Okay, so when you have the second tail, the tail of the second candle that completely eats the previous candle's body, so it's time to go long in this case. Okay, where you have two choices: wait for a retest and enter at the 50% of the first candle of this candle. Okay, so about here. Okay, or just enter at the breakout of the high of this candle. Okay, so this is the first enter and this is the second. Okay, I do enter. Well, it depends on the time frame, because this candlestick pattern works in every time frame. But I use it for scalping and for intraday. Okay, so for scalping, it's very difficult to. It's too quick because I use it on range or 1 minute time frame, and it is a very quick pattern. So a lot of the time you have no times for the price to retrace on the 50% of the candles and keep going up. Okay, so I just enter on the breakout of the high of this candle. Instead, if you use it on 50 minutes time frame or 4 hour time frame, you have time enough to wait to retest the 50%. Obviously, you will have with the retracement of 50% of the candle, you will have less. Okay, you will have less trades, obviously, because this is a momentum pattern. Okay, so what does it mean? That probably after this pattern, price will keep going. Okay, keep going with the momentum. Okay, so this is the reason. That's the reason why it's not rare, but I mean the retracement is going to take place 1 time every 3 times. Okay, so you have a 60 6% of the trades, of less trades, but you have so much more risk-reward ratio. Okay, well, so this is the first trigger, and for me is the most important one. Okay, sorry for the alerts, but the second one, so like here, another very good confirmation are volumes. Okay, so I use this simple, the standard volume indicator that TradingView gives to us, and what I want to see is a clear volume by my side. Okay, and I want to see it closed to the candles that I want to use for trigger. Let me explain. So if we have this Liquidity pattern, okay, but as you can see here, yes, we do have wide volumes, so bullish volumes, okay, but they're not crossing the moving average, which is this one. Okay, this is a standard moving average built on the volumes. Okay, you can easily find in the same indicator. Okay, so I just want to see a strong movement, a strong push of the volumes that completely destroy this moving average. Okay, and cross like this. Okay, so when I see this kind of volume, even if it's not close to the candle that I consider for my entry, it doesn't matter, because I see this engulfing. I have this great huge volumes bullish. Okay, so what does it mean? That a lot of buyers volumes and orders came into the market. Okay, then if this will be also a good level, liquidity level, I don't know, but I don't care. I don't care right now, obviously. You have a good liquidity level here. You have you have an Liquidity pattern. You have been strong increasing of the volumes. Okay, so you have a lot of confidences by your side, so it could be good. Okay, so here I will enter like this. Okay, another very good factor, another very good indicators you can use to trigger is this. It is called heresy. So basically you have it's just a standard RSI with Fibonacci candles. Okay, so how do I use this indicator? To be honest, guys, I'm not a big fan of indicators in general. Okay, I would like to see, I like a clean graph. As you can see, I don't use the colors. So all my bars, all my Japanese bar candles are the same color. This is because I want to have the graph as clean as possible. Anyway, how do I use this kind of indicator? First, I just want to see divergences. Okay, like this. Okay, so I have these divergences, and remember, not mine, but the divergence I look for is a divergence that go inside the green box, okay, or better, outside in the extremely part here, okay, and then re-enter the blue box over here. Okay, so I absolutely don't consider any divergence that are in the middle, like you know, let's suppose that here there's a divergence, but probably here. Okay, but if you see a divergence the blue box, okay, so close to the center, I will not consider it. Okay, so the first use of this indicator is a standard divergence RSI. I know that it is an old concept, the divergence, I mean, but for me it's still valid. Okay, so in my opinion, if you are good to identify a good zone, if you have a strong volumes and a divergence, this could be a very good combination of factors that you can use as a trigger, also without Liquidity pattern, because you have another engulfing right by here. Okay. Another use of this indicator, simply the green, so the changing of the color. Okay, so basically you can enter the trade when you see a divergence, when the candle and the RSI go touching the extreme part here. Okay, so indicator goes around here, touch the black part, okay, of the green part, make a divergence, and then as you can see, you do have a change of the color. This could be good as a signal. Okay, so you can enter here on the second green candle. Okay, stop loss will be just below the low, and risk reward, it depends on your trade, on your money management. Okay, so this could be another very good combination. Okay, if it's not enough, if you want to be pretty much sure that you are going to be with the trend, you can use, for example, exponential moving average. Okay, so there's, for me, for intraday, and to better identify the momentum, I use the 14 exponential moving average, which is this yellow one. Okay, if you take a look to my 81 strategy video, you can easily see how you can use it, the 14 EMA. Okay, so basically, how can you use the exponential moving average? The white one is 100. Okay, so you have to see this kind of movement. Okay, so you have to be sure that you have inside a momentum. Okay, so when you see the yellow line cross the white, what you can see, just wait for a retracement. Okay, like here. Okay, so retracement here, and then inside here there is a clear candlestick pattern. Okay, and so with this pin bar, after this pin bar, with the breakout of this pin bar, you can enter. Why? Because you have price across both the moving average, retrace yellow moving average across the white moving average. So it means that the momentum is going to change. It's already changed, to be honest. It's already changed. In fact, you have this strong movement, a strong break of this structure. Okay, and so you just wait for the retest. Okay, where just wait for a candlestick pattern, or you can wait for an Liquidity pattern, or you can wait for a strong for another strong push increasing of the volume. Okay, or you can wait for another red candle right here with this heresy indicator. Okay, so do use the moving average if you want to be sure if you want to better identify the momentum. Okay, do not use moving average if you want to trade counter trend, have more possibilities to trade, have so much more triggers, so much more trades, but you will not be, you will not always be with the main trend, so you're probably going to hit more stop losses. Okay, the last indicator I want to show you is SSL channel. And basically this is pretty much good because it behaves like a moving average, but it is so much more, so much faster. Okay. For example, so basically what is the main logic behind this indicator? Just when you see the red line that is above the green line, so across of the green line, it means that we are inside a bearish momentum, so we are going to look for a short. Okay, vice versa, when you're going to see across of the green line to the red line, so basically the green line is above the green line is above the red line, we are in bullish momentum. Okay. I only speak about momentum. Okay, I do not speak about trend. Okay, most of the times are the same thing. Lots of the times they are not. Okay, so if you are an intraday or a scalping trader and you want to just have a quick trade, the momentum is so much more important, on my opinion, because you just exploit. Okay, exploit what is really going on in terms of volumes on the market. Okay, so how can you use this indicator, this SL channel? Basically, just wait for a momentum, for a cross, and then you can wait for an EDT pattern. You can wait for a retest, and for example, a pin bar. Okay. Or you can wait for an engulfing like here. Okay, this is also very good because, as you can see, we have red, and then here we have green. Okay, after this strong and clear break of the structure. Okay, as you can see, I do use another indicator, which is this one, fractal break imbalance. Which is the only indicator that I always use, because it let me know, it let me to identify immediately, okay, the breakout structure and the momentum candle. Okay, so here we do have to better identify, for example, the inefficiency. Okay. Anyway, so you see a stronger cross of the green candle. So now what you have to wait is a push of volume or change of color on the heresy indicator. So basically, these are my favorite indicators, my favorite factors that I do use to trigger. Okay, obviously, as I told you, you have to identify the zones from which you have to look for a trigger. Okay, because a trigger is not enough, and it will be better, on my personal opinion, it will be better for you to use a combination of all these factors. Okay, so I do not use the heresy indicator alone. I do not use the the RSI divergence alone to enter the market. The only candlestick pattern, the only factor that I use alone, sometimes, not always, is an EDT pattern, as I told you, because I know I have backtested so many times this kind of pattern, and I know that is a strong signal, a strong momentum signal. So I know that probably the trade will go by my side. Okay, but if you want a rule, just use an EDT pattern and at least two confluences that I have just explained to you. Okay, so guys, that's enough. I really hope you like this video, and let me know what you think about using the comment section below. Same old story, I know, but just give me a favor, press the thumbs up button, press the bell so you will have a notification my videos. Subscribe the channel, okay, and join my community. But above all, I just want to know what you think about this video, so use the comment section below. Okay, thank you very much, guys. See you in the next video.